Hi, today I'd like to talk about a couple of trades that we actually took over the past couple of days and that were also a reaction of the tapering decision today with FOMC. Today is December 18th, 2013. And I'd like to start off with this particular trade. This is the Euro Yen. This is the 1 hour time frame. And this trade was actually one that I lost on. I actually lost on this trade with the trade copier. So every once in a while I get the question from a prospective subscriber who's considering using the trade copier. They'll ask me, do you use a stop loss, and how difficult is it for you to actually earn your losses back after you experience a losing trade? And it isn't that hard at all. I certainly, if I experience a losing trade, I don't revenge trade, meaning that I don't just jump right back into, chasing price up and down, trying to get a few pips here and a few pips there to earn back the losses. I wait very patiently for the very next trade to develop my trading strategy. My trade has to come to me. I wait just like a hunter, wait for it to come in front of me, and then I take it. So if I do experience a losing trade, it's not uncommon, and it's very normal for me to actually earn the loss back on the very next trade. And often when I say that, every once in a while somebody has a difficult time believing that, but it's very easy as long as you take the trade that you know. That's what's really important, is to be aware of what you're doing. Make sure that you're trading what you know. Don't just chase price up and down just because it's moving and you're hoping to scalp a few pips to earn back any losses. Wait for that setup. Wait for the one that you know, and you will earn your money back. So in this trade, I went short this pair. It looked like more or less a head and shoulders pattern is what I thought it was what it was starting to set up like. And then I was waiting for price to take out this support level here. And there was also approximately a 50% retracement from this low to this high in this pullback. And on the larger time frames, the 4 hour time frame also looked like it was going to support a move to the downside. So I went ahead and I went short this pair, but it immediately turned around. I was up probably 10 or 15 points, and then it turned around and then it stopped me out. Now again, I always use a stop with the trade copier program, because you never really know. It's one of the most unreliable and unpredictable things to do, to leave a trade open with no stop. I never do that. I always have to put a stop in place. That's part of my trade plan. So when I got stopped out here, I immediately started looking for other trading opportunities, because sometimes when we get some price activity or movement, it will actually surface and show up somewhere else. And what I actually was able to do was take another trade that earned back all of the losses. I'll show you that one here. This was on the pound dollar. Now, the pound dollar actually developed a trade that I call the T2 pattern. And the T2 pattern is a very advanced candle pattern. I actually teach you how to do that, because I give you a bonus free trading course with the Trade Copier program so that you can learn exactly what it is that I'm doing. So here we're looking at the pound dollar. This is the pound dollar 1 hour time frame. And basically what the T2 pattern is it's a bottom pattern. It's a W bottom. Now there are different shapes and different formations for a W bottom, and this one actually set up again that T2 pattern. So what I do is I wait for a reversal, but what I'm actually looking for is price to make a new relative low in price here relative to this time frame. This is the 1 hour time frame for the pound dollar. There's a new low in price, but you can see a lot of indicator divergence. A whole lot of indicator divergence. Usually I'm waiting for this particular pattern to develop at a very significant support level, something perhaps that I can see on the 4 hour or the daily chart, and then I wait for the reversal candle pattern. Reversal candle pattern set up right here where this X is, and whenever I get into a trade like this, the profit target is always the price swing high that created the T2 pattern. Here is the price swing high right where that yellow arrow is. Now in most cases, price will continue a little bit further. Sometimes it'll blast right through it and continue to rally. Whatever the case is, I'm always going to follow my trade plan, because this trade actually resulted in more than 60 pips profit. So I was able to earn back the losses from the Euro Yen, but this one is extremely powerful, very profitable. And again, you'll notice here as we approached the the tapering decision, we get this huge, massive rally. First of all, it does reach that target, which is exactly what we're looking for. That's the take profit level. Once it reaches that level, I'm done. I've closed this position. I'm out of this pair. I'm flat. I've done what I came to do. I took my trade. I followed the plan. I took it from the right entry to the right target, and that's it. If anything else develops after that, then it would be another type of trade. Now, you'll notice that with the tapering decision, here's that spike, and it has since pulled back. That was obviously a news trade, but you can see how effective this T2 pattern is. It's really a W bottom pattern, and whenever you get that reversal, as soon as you see the new low in price, you want to make sure that there's a lot of indicator divergence. Here I'm using the CCI, and I'm also using the MACD histogram, but you have to wait for that specific reversal candle pattern, like an engulfing candle pattern or a morning star or evening star, depending on which direction you're trading it in. And again, the profit target is always the price swing high that developed the T2 pattern. So we were able to earn profits here. Now, there was another trade that we actually took. There was a continuation breakout trade here on the dollar Canadian. Let me show you this one. This one actually developed here on the 1 hour time frame. I'll go back to where that entry actually occurred. Let me open up these charts one more click so that you can see what's going on here. Here is my continuation signal candle. This is a breakout. What it does is it basically puts me in the path of a breakout and then the trend that develops afterwards. This trade pays me approximately 55 pips every single time I trade it and I use it correctly. It works just the same here on the dollar Canadian. So here on the dollar Canadian, we wait for the signal candle, the candle to close above this resistance point. This was consolidation right here. It went on for many, many hours. You can clearly see that range of consolidation in there. And with that signal candle, I have three forms of indicator confirmation. The first one's the Bollinger Bands. They have to be separating away from each other on that closed candle. The next one's the CCI indicator, and then the MACD histogram. And again, it's 55 pip target. I want to show you exactly what happened. Never was this trade never at any point in jeopardy of failing, and it continued right on to our profit target and then even went a little bit further again as a result of that tapering decision. It's a powerful technique. It works over and over again. So we experienced one loss, but we were able to jump right back in and not chase price, but to take the exact trade as it came to me, and then we were able to execute these trades with the trade copier, and everybody got the same results. Again, this is a powerful technique. The first one was a T2 pattern, which is a reversal pattern, and this one is the continuation breakout trade.